Hey there, folks. I had a commenter leave a request for me to review an indicator that I have published um, regarding the ORB strategy. So, ORB stands for Opening Range Breakout. It is a breakout type strategy, so there's some risk with that. And it's based on, at least from what I understand, it's based on an old floor trader's strategy and the belief that the first 15 minutes of trading creates a range that is effective for utilizing to trade against for the remainder of the regular trading session. Okay, so the indicator is called Orb with Price Targets. It is not one that I developed originally, it's one I found, and I wanted to add a couple things to it, namely pre-market support, futures market support, and I want to say I added fib targets versus percentile targets, and a couple other things I believe. um, I do plan on rewriting this. I'm a little worried to do it because it is an indicator that for whatever reason people are finding and favoriting, and I don't want to break something that everybody is relying on. But so Orb with Price Targets is the name. When you add it to your chart by default, this is basically what you receive. All right, so you can come in here in the settings and you can adjust the opening range time. So from a um, New York time zone or Eastern time zone standpoint, it is always the first 15 minutes of the regular trading hour session, 9:30 to 9:45 a.m. Eastern time, and everything else you can pretty much leave and you'll have exactly this. So a couple key pieces to look at here is the main box. So this is what is considered the quote unquote orb or opening range. And what it's basically set up to do is monitor the lows and the highs for the first 15 minutes. And I'll step down to a 1 minute chart. I'm always on 2 minute, but stepping down. So you'll see if I plot this right at 9:45, that's where you see these center line plots show on the box, and everything is sealed up at that point. So this box will no longer expand with highs or lows at 9:45, assuming that's what you have configured here. Now, once you have that done, the trading strategy is actually quite simple, but by itself, I will say, especially here lately this year, you definitely want to check different time frames with this strategy because it's a breakout strategy. You could potentially get faked out, and what a fake out means is effectively where the price, let's just say this candle came out here and you think, okay, I'm going to join that candle, and I'm expecting to take my trims, hopefully down there, there, and there. But instead, what happens is, the price will come back here, and then maybe worst case scenario, it just blows you away, right? So you do have to be careful. You don't want to chase these things, but the unfortunate thing is you kind of want to grab these candles as they're breaking the range, because if you don't, depending on where you place your stop loss, it could be a rather giant stop loss. So Friday, this past Friday, actually worked, quote unquote, worked rather well. So if you look at taking a short where we have a breakout, we come back. This candle specifically is very important. It stops dead on the orb low. And then this candle here is where I would be looking to enter. And everybody's going to have a different opinion. Some people say place your stops here. Some people say above the candle you enter, whatever, right? But I would probably place mine somewhere around here because of the reversal chance of reversal. I'm just not looking to take huge losses, and then I like to target like a 2 to 1. So the 2 to 1 basically does not get you to the next level. So I would look to at least take this. So we did receive that, and we actually received it in what looks to be about 7 minutes. What is that? Okay, 11 minutes, 12 minutes. So that's a really good trade there. And then of course, what happens is every time you take one of these, you're supposed to move your stops. So let me find the paint tool here. All right, so if you enter here and your stop's up here somewhere, okay, trim here. Then as we break this low, move your stops maybe down here, or find an area where you could place your new stop. Apologies for my terrible S's. I'm doing this with the mouse. But anyways, I think you get the point. The stops would be moved down. So then we break this one, you take another trim out, and of course we just kind of knife right through here, but probably set your stops somewhere around here. So you get the idea. When we break down here, obviously if you still have some of your trade on, you'd be moving your stops for sure, and then eventually you'll hit your stops. So that is like a picture perfect orb day. It does not always occur, of course. Another option you can do is add in something like a moving average, maybe an RSI if that's something you're into, and use that to kind of guide you and be a little more patient. So what I find is oftentimes the orb will sometimes work in the morning, quote unquote, and then you'll find that the price will meander around, and it often comes back to the orb. So here today, or on this day, it came back to the orb low, and you can see we rejected and moved right back through these lines. And these lines are effective. Here they're showing pretty good price action against them, and then yet again we come back up, test the orb low, only to dump right back through and stop right on this line yet again. So my point is that throughout any given day, if it's a day where we're not just chopping through the orb range, the orb itself, you could say is in effect until the end of the session. So you don't need to rush into it. Let the day marinate a little bit. And if you've watched any of my other videos regarding market internals, I also have some favorite times of the day around 12:30, 1:30 that I love to trade. And that is an effective time frame for a ton of different strategies, including orb. You can see right around 12:15 and right around 1:30, that's where these two orb trades decided to show up. So it's roughly around the hourly changes and when other global markets close up for the day. So that's why, two reasons why those times are effective. And here you had a pretty good idea of a couple shorts. So let's go back to a different day. So here's another example of maybe the unfortunateness of the orb strategy is if you don't enter the live candle, then you may miss out on the move. Okay, you might miss out because you're waiting for a retest and you're not going to get it. Then you might think, hey, I'll just scalp off of this level, which you could do, and that does work some days. It kind of worked here. If you set your stops back down here, you captured a pretty good move here for the day. The issue with that is that if the orb, if the market decides to come back into the orb, your stop is already going to be here, where other orb traders or other market participants would be entering. So effectively, your stops become somebody else's entry. That's never a good thing. So it requires you to take more risk than you should for this strategy. So you have to be very patient with this strategy. And some days they just rip right through and there's nothing you can do about it. And that's just part of trading. So not every market move is going to be for you. This is one example of that. Now, let's see, what day is this? February 22nd. So let's hit the 5-minute. Sometimes 5-minute presents the price action a little different. The 5-minute candles might be or sorry, the 1 minute candles might be a 5 minute wick, and so you can enter the 5 minute candle live, and your stops are still reasonable. But I'm not quite sure about this day. This day, I think these wicks would have sucked. Even if you set your stop here, you can see you would have got topped out a couple times. So there's just so much nuance with this, and I will say it is a little challenging to determine where your stops should be, how much risk you should take. So if you're going to use this strategy, it is a fantastic strategy. Do not get me wrong. You definitely want to spend the time and back test and become really familiar with what kind of stops, what kind of risk you're going to have to accept. So if you're using options for this, especially you're buying breakout candles on this day, it worked great. But if you buy puts on this live candle because it's breaking the orb, one, this candle's pushing down. The puts are juiced up. They're demanding a higher value, because if you're doing 0 days, especially, the gamma is going to be extreme because the market's pushing down. As soon as you buy these, and then the candle starts to trade back up, and then you get this one, there's no relief here for you. If you even have like 3 0 days for around $100 a pop, you're probably down at least one whole contract, $100, if not more. So that could mess with your psychology, or maybe that's something you're completely fine with. But then they push even higher, and then they come down. So even this one, you get this really small indecision candle, and then you get another one that almost looks like it's going to break back into the orb. So it's a strategy that definitely requires care. The morning volatility is something that I often recommend to avoid. It's always tantalizing because if you're right, you can get that big juicy move and you're done for the day, as some people like to say, they won and done. But it's hit or miss, and I don't think most will be successful trying to do that. So here's another example, and one thing I did on my indicator was I plotted the range size, because there's a little bit of a tell in that when the range is really small, like 66 cents, for example, on this day on SPY, you're going to want to expect mini range breaks on both sides. And you'll see that right here. So we get a break here, come back in, break here, come back in, break the low, break back out, come back in, break back out, and then they start teetering and teasing with potentially breaking the low, and then they even did, brought it right back up. So this is absolutely awful. If you're buying live candles or shorting them, you're going to get chopped up really bad. And then you're going to feel awful when they potentially make the move, and maybe you chase it, and then you get this, where you just get screwed. So please, this is a fantastic strategy, fantastic indicator. But just like with any other trading strategy, care must be taken. And understand the risks, especially if you're using options, 0 days, especially, and what that means for these contracts when you're shorting these live candles with puts. This day did okay, but you probably got chopped up here. So just it's a very different trading strategy. It requires very quick execution, quick thinking, and high tolerance for pain, and just a lot of things. You got to be dedicated and go review, I would say, like 100 days worth of orbs and really get a feel for all of this. And I would even encourage back testing it with paper money on TradingView, or if you have like Thinkorswim, you could use it on demand, and just really see what happens to those contracts, because it's an eye opener if you're not aware. So other than that, this indicator does have a couple other features. You can use this with crypto markets. So if you want to use this with Bitcoin, Ethereum, or whatever you're trading, flip it to 24/7, change it to whatever time you want. You can also adjust this to different price targets. So you can turn these off, turn that all the way off, and then you're just maybe scalping one whole candle or something. Just depends. You can also adjust this to fib levels. So this is like the 23.7 and 61.8 and all those different fib levels. They do have effectiveness just as much as the other percentages. That's all they really are, is just different percentages instead of by 0.5s or ones. They're the fib ones. Um, Another thing I would encourage to look at is experiment with different orbs. So one that I really find fascinating is the 8 o'clock to 8:05 pre-market orb indicator. So if you set it up to 8 to 8:05, enable pre-market support so it can draw from back there. And I've done a fair amount of analysis on this one. This particular time of day is where a lot of the markets will light up and start pushing lots of orders. And that's why, depending on your charting and the data providers they have, that's why you'll see these really funky candles, is because that's where some of the orders are coming in. And also futures markets starts to heat up at that point as well. So your main indices, SPY and Qs, will be really seeing the heat from whatever futures market is doing. But this particular orb is also very effective. And in some cases, I would say it's almost more effective than the opening range. So on this day, for example, you filter out a lot more of the chop. But then on the days where you actually maybe would have missed this move, you could enter this one live, and your stop is much closer. So it's a little bit different, and I don't know how many people are really using it, but it's pretty good. Now on this day, of course, you're way over the orb when the market opens, so you're sitting on your hands. But then look here, you get a nice break back out. Definitely something you could scalp. Still scary, of course, with all these wicks, but definitely check out different orbs. Experiment, and if you find something interesting, feel free to leave it in the comments. But that's gonna wrap it up, folks. Like I said, heed the warnings for sure, and be very careful if you're going to use options with this. Maybe even check out the 15-minute candle structure. So 15-minute might even be better for the regular orb. So we can set this back up, back to regular orb, buying those candles. Yeah, that actually works pretty good. So 15 minutes, pretty good too. Just experiment, back test, and really know what you're getting yourself into when you try the orb strategy. All right. Thank you for watching, and good luck if you try to use this.